buy what the government tells you to buy what the government's buying, and the governments are buying it. AI power demand right now is 4.4%, and it's going to move to 12% by 2028. It's a big jump for an industry that's only used to growing 2% per year. They want to accumulate before the rest of the planet wakes up, but the planet is waking up.
For decades, people have been talking about what could be the new oil. And now with the actual oil, WTI, trading above $80, it's come down a little bit since this week after Trump and Iran announced a memorandum to make a deal. People have still asked themselves, what could replace oil in importance in our economy? Let's discuss this today with Ian Harris, CEO of Copper Giant. Now, Copper Giant is involved with the exploration of copper. Could copper be the new oil? Ian, let's talk about that. Welcome back to the show. Good to see you.
You too, David. And this is kind of a continuation of a lot of different conversations. I think the difference today is that it's actually playing out, right? Like the market is responding. So it's good timing. And, I get that question a lot, right? Is copper the next oil? I think metals are the next oil, right? And I think the biggest component, of that composite that is copper, right? If it carries an electron, that electron is at some time earned during its path is going over copper, right? So as we move towards and it seems that, the decarbonized world, right? While it may happen over an extended period of time, the difference is now we are moving as fast as possible into a digitalized world, right? A digitalized economy. And we've talked about that quite early. I said, the difference between AI and the conversion to sustainable energy is that it's, if somebody gets fast, somebody gets faster, right? It's a race, and it's existential for companies and it's existential for countries. And so I only see it accelerating. Before we were talking about 1%, quickly it became 2%, then became 4%. I just read an update recently that said that AI by 2000, I'll get the date, but I think it's 2032 will be, like 14% of the energy mix, consuming 14% of the power of the United States. So that puts it in perspective.
And when you say the market's starting to catch up, this is what I think you're referring to. On my screen here is the price of copper versus the price of gold, denoted in the blue line. Now, copper right now is trading at $6.50 a pound. Gold has been trading off its highs ever since early March. Now, the two metals have historically been moving together quite closely. Divergences do happen throughout the course of their histories, but this particular divergence is quite stark. Ever since the beginning of May, late April, they've been moving in opposite directions, gold down and copper up. Tell us why.
Well, if you are an analyst of charts, and I'm not one, it looks like a rotation, right? Rip Rule goes, it starts in gold and then goes to silver and then goes to copper, right? So but I'll be honest, I don't think that the markets are big enough yet in the metals to compare to the other markets. So it could easily be a rotation from chicken farming into copper. I mean, I'm joking, right? But I think we're seeing two things happening at the same time. Right. And hopefully have some other charts is that copper is no longer just trading like Dr. Copper. It's trading to a structural deficit that is anticipated and an insatiable demand that won't care about price, right? When I'm talking about the build out of data centers and AI. And at the same time, you had oil take a peak and then we announced peace and then that's coming back. Gold is that the economy looked too over hot, and there's an anticipation of changes of that there might be an increase in rates, or it might have been overbought anyways, right? It got too hot too quick, which we've seen play out a few times in the commodities. We haven't seen as much and it's easier to speculate in the commodities market than ever. So we even saw more speculation in copper than ever, which would be traditionally a very hard market to speculate in for the average investors. So I think those two things are playing out, and on the chart it just looks like a rotation from one to the other. But I think that there's some structural, fundamental reasons for this since May.
I have another theory, And let's just hear this out for a second here. I put a chart of NVIDIA overlaid with copper and gold. And NVIDIA is a barometer for the S&P right now, among other things. But copper has followed a chart of NVIDIA better than it's followed gold in the last couple of months. And actually, asset classes tend to move. The correlation over the course of a longer period of time is 1, tends to merge towards 1, meaning that these things have moved up together. But this relationship has held steady over the last 1 year at least. So it looks like copper is trading alongside stocks more than it's trading alongside gold, which would kind of make sense given its utility right now. This is just something that I've noted. Yeah.
It makes a ton of logical sense, right? The AI market is becoming mature. There's concerns about it's being overpriced, and people are going, how else can I benefit? I think you see that playing out. I've also did the chart because we always talk charts on your show. I did the S&P 500 versus copper, and copper is now pulling away. But I think I bet you that NVIDIA is a huge component about it. So this is playing out. I think people are saying, okay, this is getting overheated. Where else can I play? And so that also tells us another message, right? If people are now playing directly into copper, then they're going to go, okay, how do I really leverage the copper? And it's going to move into the equities, right? So this is a classic cycle that is playing out that we normally see. It starts out in the commodity, moves to the majors, moves to the mid tiers, moves to the juniors, as the cycle becomes more mature. And I think we see it playing out. I mean, that's why I started the conversation. We've been talking about this for a long time, and it actually sees, you can see it playing out in real time. I did the same charts as you before talking. The copper versus gold, copper versus the S&P, copper versus oil is actually interesting because it spiked, come back a little bit while copper has just continued, which tells me also that it's breaking out of the Dr. Copper role and is starting to price in the structural cycle that we're coming into. And so it's showing up on the charts, right? The thesis is showing up.
Ian, the gold miners have taken a bit of a hit. This is not a conversation about gold miners that we're having today. The point I'm trying to make is that there's been a bit of a re-rating on the GDX ever since gold fell from its highs earlier this year. The point I'm making here is that investors have been feeling wary of going into the mining sector overall, a sector that you're participating in. Even though you're not in precious metals, you're still a miner, so to speak. The bullish sentiment on miners is at a multi-year low, despite the fact that most components of the GDX are still trading near their all-time highs. So why is that? That gold's pulled back 20%, still above $4,000, which is so higher than where it was a year ago. But people have rotated out of miners, it seems.
With a big caveat here, I am full of opinions. I'm full of a lot of stuff, maybe, but I'm definitely full of opinions. So I'll provide my opinion, right? I'm not saying I know I'm correct, right? This is a strong opinion, right? And people do not invest in gold miners or anything because they think they're going to make money. They invest in gold miners because they think they're going to make more money than they can make in other places. Do you understand the distinction? So if you look at the chart, and I saw a chart recently, it was probably, anyways, I can't remember who it was, but it showed as a industry, the profit margin of gold miners right now is like double or triple the next closest sector. They're making more money than ever. They are literally cash machines. They're pouring out cash. They're doing extremely well. Right. But people okay, well, that's great. Well, where can I make even more money? So people are still moving around. Obviously, they've gone up because gold price went up. So gold price is going to come down. So they're not going to be as hot anymore. Right. It doesn't mean they're a bad play. So we also have to think about how the money is moving. There's the old app, follow the money, right? Follow the money. And while there's other areas that are hotter, that money will rotate that. So it also creates an opportunity, right? Because it's not like they're not going to stop pouring out cash, right? They are pouring out, and the world will wake up to that, right? I think you get distractions, and at the same time, you have a SpaceX IPO going on, and there's all the excitement and buying tulips, right? So this will rotate, right? And it only creates opportunities for everyone. The money is definitely starting to rotate, and we're only in the very, very beginning of this rotation on the equity side, and it's starting to play out, right? So I think that's the dynamic that's going on, and really the pool of, I think if you look at the valuation of all miners versus the rest of everything, it's like 1% of the total capitalization of market right now. It's at a historical low. So even as just little things start, a couple drips come into it, but these drips can quickly turn into a flood.
As metals rotate into becoming the world's new oil, so to speak, what does that make the miners from an investment point of view?
Well, I think that we have a couple things going on. Traditionally, the
utility company. Is that, I mean, that's the parallel that's running in my head right now.
Well, we can look at historically, miners have done better. So they've always been a way to leverage metals prices, and it's pretty simple, right? If it costs you $1,000 to produce gold, and gold is $2,000, right? You're making a lot of money, but when it goes to 3,000, you're making twice as much money. So you're naturally leveraged to the metals price, and it provides that leverage to investors. Right. But there's other things going on right now miners don't have the capitalization to become the utility, but utilities can become the miner. You get what I'm saying? And beyond that, the technology companies can become and forced to become more vertically integrated. I think that's what you're going to see. I've been saying it. I called it probably way too early. I thought that's something that was going to happen. We saw it in the car manufacturers starting to get more vertically integrated. I think there's going to be more vertical integration. It might not be, I want to own and run a mining company, but they're going to invest in order to have offtake, right? When we see a deglobalized world, a world right in front of us is starting to deglobalize, the underlying assets that start those production chains are the big, big winners in that, right? I can speak from a company that has an asset that doesn't even have the PEA done yet. Like, we're working on it to do the preliminary economic assessment, and I've already have companies that say we want to invest to see a pipeline to an offtake agreement, right? Those conversations have already started at this stage. So there are lots of people that are thinking of that. And there's going to be a lot of people that are late to the game, like Europe, for example, that they're going to do, there's going to be that knee-jerk reaction. And so that bodes very well for the underlying equities.
If copper is so important for the development of pretty much everything that's important in our society, why is it not a national security issue that we don't have enough of it to meet the future demand? By that I mean the governments are pretty calm about this fact.
I would disagree with that. Absolutely disagree. No? Okay. Like, first of all, the United States set up specific tariffs just on copper, and it revised those recently on copper. It set it up as a strategic metal. And I think we've seen the stockpiling in the United States. We see the stockpiling in China. I think at the beginning, 2 years ago, there was 4 strategic stockpiles in the world. Now there's 6. And the major difference is they were kind of just there. They didn't do anything. And now they're active, right? We have lots of different countries creating strategic stockpiles, and they're very concerned over the sourcing. Now, we don't see it as much because the headlines would be rare earth metals, but I call that's the skirmishes. They're much smaller market size, so they're more accentuated when those supply deficits show up, but it doesn't take very much to solve that problem, right? It takes one little mining and you're okay again. But in the background, the real battle, and I would always say that China's assassin's mace has been copper because they have such a stranglehold stranglehold on it, and it's such an important metal that crosses all the different areas, right? You might need antimony for bullets. You might need germanium for robotics. I'm making stuff up, but you need copper for everything, right? You need it for electric vehicles. You need it for AI. You need it for anything that carries electricity. You're going to need it. You need it for the infrastructure. You need it for the growth. You need it for all these different reasons. And I do see it playing out. Now, I like an old adage from Frank Giustra. He goes, don't buy what the government tells you to buy what the government's buying. And the governments are buying it, right? They just don't want to make a scandal, right? Because they want to accumulate before the rest of the planet wakes up. But the planet is waking up, and countries are waking up and starting to do things in order to secure supply.
So let's just take a look at some numbers. I think the people watching the show right now are wondering to themselves, how much copper and resources overall do AI data centers need? Let's put this into perspective here. I was reading an article that came up on social media a couple of days ago. AI could use as much water as 1.3 billion people by 2030, according to the UN. The water used by artificial intelligence is expected to equal the needs of 1.3 billion people by 2030, threatening natural resources for billions around the world. That made me think, okay, what about copper specifically? This is according to BHP. Where does copper come into this equation? Data centers require vast amounts of copper. A study of Microsoft's $500 million data center facility in Chicago found it used 2,177 tons of copper, equivalent to 27 tons of copper per every megawatt of applied power. I encourage people to check out BHP's articles on the future of copper and demand growth. I've been taking some material out of this for this interview. Pretty good read. Anyway, put this into perspective for us, Ian. How much is 2,177 tons of copper relative to the production capacity of a normal mine of copper?
Okay, so there's two numbers in here that you need to pay attention to. This was a little data center, right? It's comparing it to a tiny one, right? You saw the build outs that are being proposed are 1,000 times higher than that, right? We're talking about $500 billion. And that's when it becomes a larger issue. 2,000 tons is not a big deal. Well, let me put it in a different way. Antamina of BHP just said that they're going to invest $1 billion into that mine to increase its. So it's one of the last, we can get a little bit out of the brownfields project to produce 70,000 tons of copper more a year, right? Antamina is one of the biggest copper mines in the world, and you would assume is a massive amount of copper, right? But the new data centers, they're talking, some of these mega data centers can use up to 200,000 tons of copper, right? They are way bigger than these small little data centers that they started. They're getting really big build outs are going on right now. It is absolute a race. I love the BHP. I use it as my gold standard for when you think about where trends are going. I love that article. It's been out for a while, but even the numbers in it that are associated to AI are already twice as big now. And it's something I anticipated because, David, if you have a cool AI in a data center and you get it built faster, I go, what am I going to? Oh, I got to go faster. Everybody, it's not like the average works. It's the top that now sets the new line, and everybody has to follow that new line, right? There is. SpaceX just bought, what is it? Cursor is the programming tool. Ooh, I'm going to show my non-coding experience, right? Everybody's moving towards AI, right? And by the way, the number that I had before, I actually found it. AI power demand right now is 4.4%, and it's going to move to 12% by 2028. That's 2 years from now. It is unbelievable that this is going on. And so in terms of total copper demand, it's not huge, but it's a big jump for an industry that's only used to growing 2% per year.
My only concern with this longer term outlook is that we're assuming linear growth. What could derail this is possibly AI getting more advanced such that it requires less chips for more compute power, becoming more efficient, so to speak. So less hardware for the actual output in software, to put in layman terms. I think a lot of people a couple of years ago got the EV story wrong. People were expecting EV to grow at a pace that was consistent with Tesla's initial growth in the early 2010s. And then we saw over time that demand for EVs across the world started waning. China was an obvious exception, but that was more of a state enterprise kind of thing. And so I wonder what could derail our conversation today going forward.
Yeah, and it's one of the things I've been trying to talk about for a long time now is that EV was set based on goals. The United States said by 2023 we are going to get to net zero, right? And then to do that you're going to need a cajillion mines, but it was a goal. It was also the one that gets you elected and the one that you go, how much does it cost? And you go, no, take your time. Take your time, right? It's not something that anybody was really doing a massive amount of work on. It was more, we need to do it, but take your time, right? The difference with AI is that it is existential. Right. I love Robert Friedland when he goes, when your drone can kill me 1 millisecond faster than my drone, I need a faster drone. Right. So I think that and you look at what is going to be the constraint. And I think the constraint right now is how quickly you can build, how much capital you have. But these tech companies have so much capital, it's ridiculous. And then it's about the build outs. We'll get more efficient at the build outs. I agree. But the problem is that once yours is faster than mine, I need a faster one. Right. So it's always pushed down to the next constraint. And the next constraint after power, which is also kind of the same constraint, is metals. It's the material to actually do these builds. And we're not prepared for it. We're not prepared for it as an industry, and we definitely don't have the deposits in some of the major, like copper, right? Some of them, there's the deposits, and it's a production problem in some of these rare earths. There's plenty of these rare earths. They're called rare as a misnomer, right? The problem is we don't have the capacity to do the processing of them and the conversion of the metals, but the deposits are there. So it will solve itself out. It will catch up. Lithium is another great example of that. But in some, the metal's just not there. We do not have the copper. We do not have the deposits. And so it's a much bigger problem.
Okay, and this is pretty important. Where is copper demand coming from? Traditional growth, mature stock, China, stock in use is only half of the U.S., still room for growth, developing relatively little stock in use. Energy transition, we talked about. Digital, we talked about a lot. Towards 2050, according to, this is from 24, by the way. This is an article from 2 years ago. There will be some balancing factors for the significant growth in copper demand. Substitution refers to the replacement of copper by other materials such as aluminum, plastics, or fiber optics, which can be cheaper, lighter, or more efficient for certain applications. Thrifting refers to the reduction of copper content or usage in products. This is important. 2011, I remember this. I was reading about 2011 when gold was at its then all-time high. The semiconductor industry started using less gold in chips. That could happen with copper and other base metals as well. I'll just let you comment on those 2 points.
Yeah, I absolutely. And this report actually does a good job of trying to put in all those different factors. But the chart right above us, what is a bigger takeaway? We have the traditional uses of copper that have always been there, and then they have traditionally produced a new demand every year, right? The difference is you have new layers on top of it. Whether the EV is as fast as you thought, and they kind of have that into their model, but there's a new other layer on top as digital that weren't there before, and they're finally getting to the percentage points where they're making a big impact on the overall demand. And then I wish I had one more chart, which would be, look at copper price today. It's at 650. It's at 650, right? If you look back, and let's go back in time and say, what was it 2 years ago? What was it 3 years ago, right? And then look at how much more copper are we producing? It has not incentivized new in production because it can't. The supply side cannot respond. And that's a big difference where maybe in the past cycles, there was this big response. There was brownfields projects that now become bigger because the price now can cover the expansion cost. And those were the quick and easy, will clip on some more production. And that is not happening right now. Look at the biggest producer of copper in the world, Chile. And they just announced, I think it was down 14% or 12% to the lowest copper production in 2 decades out of Chile. In the highest record price of copper that we've ever seen, right? The industry is not responding.
So the fact that copper is at above 650 right now a pound, what is that telling you about the future prospects of economic growth? If you were to assume that Dr. Copper, as people call it, is is and has been a leading indicator of economic activity, or at the very least, a coincident indicator. What is that telling you?
Well, I think that Dr. Copper is breaking out of its skin, right? I think it's becoming more than Dr. Copper as we see these new underlying structural reasons for to be more than just electrification. So if you looked at that original chart by BHP, the traditional use, even today it's still 90%. So the most of copper usage is based on growth, right? Just growth. But the second part of it is once prices go so high that it is who can pay the highest price, which would be, I would argue, would be the data center build outs. These tech companies have the biggest checkbooks on the planet right now. Yeah. That means that who's going to suffer are the countries that cannot pay for the electrification. Right. And so, yes, I think it will start affecting the growth of of certain countries.
I'm curious how copper correlates with the GDP annualized change. I'll pull that chart up later. But 2022 was technically two quarters of negative GDP growth in the U.S. I'm going to use U.S. as the barometer because it's the largest economy in the world so far. So, barring this blip last year, which is from the we talked about this last year. This is from the tariffs. Yeah, tariffs. Copper has more or less been very closely correlated with not just the stock market but actual economic output. Okay, so what does the government need to do, in your opinion, to facilitate the transition into what the world will look like by 2050? The governments play a big role in copper production. It is a national security issue. It is something that people care about a lot. It is a political talking point that EVs and the electrification transition needs to happen. But at the same time, the governments can't be hating on mining as an industry if they want this transition to happen. That's contradictory as policies. So what do they need to do?
Well, it doesn't matter what they need to do. It's what they're going to do, right? So the problem with politicians is that they only worry about 4 years, right? They're very short-minded. It's why, China is beating the pants off of us because they have very long objectives and they plan way ahead of time. And they'll even tell us what they're going to do. And we still are surprised what do you mean they control 60% of the copper and all these rare earths? What are you talking about, right? They said, we've been saying it for 20 years that we were going to do it. So I think that this is an opinion. This is a strong opinion of trying to look at the crystal ball and what's going to happen, right? I think we see the talk is there. We're going to get projects in the United States, for example. We're going to turn them. We're going to have fast track permitting. We're going to do all this stuff. But guess what? The old inertia is still there, right? There's still going to be those that fight against it. There's going to be the NIMBY. There's going to be all these other things going on. They're going to see that they're not as fast as they want to be with their own bureaucracies. So I think there's going to be a whole lot more friendshoring is what's going to happen, right? The United States at the end of the day wants to secure their supply chains, and the path to least resistance is establishing the beginning of those production chains in allied locations, right? So I think the world is kind of being divvied up a little bit, and there's going to be more focus on friendshoring because it's easier to build a smelter in Colombia than it is in Arizona, right? No matter how much you want it.
Well, the Colombian election is currently underway. Colombia is the country in which your project is based on, and we'll talk about updates on your project in just a minute. But this ties into our discussion on political policies. So right now, tell us about what's happening in Colombia, why this election is so important for mining, and what you can possibly expect coming out of this.
So I think the biggest outcome is that market perception gets all its feathers all ruffled very easily by elections. But where are we today in Colombia? We had the first round of elections on May 31st. And there was a big surprise, right? Because there was multiple right-wing candidates, but they consolidated, and El Tigre ended up winning the first round of elections, which was a surprise to everybody. So there is an incumbent, more left-leaning party that is their candidate. And so now we have next level of elections coming up, the final round of elections coming up this weekend on Sunday. So on the 21st of June, we'll have the elections and we'll have a new president in Colombia. Now, I've always had a policy, and my experience from actually seeing these get across the finish line and having, experience in the board and close friends. Also, we tried to develop a project, don't care who president is, because we need to continue to develop that political will to keep the project advanced. But Sunday could be a massive catalyst because, while the left wing has put copper on the top of their strategies for mining, and it's now one of the 4 pillars of development for Colombia. The right-wing guy says, I will fast-track strategic metals projects, right? He is very much focused on moving the economy and security are his 2 main issues. So I think it could be a big catalyst for anybody who has projects in Colombia to accelerate them, right? I think we're all doing very well anyways. We're all kind of doing well and continuing to advance under the current government. But it could be a massive accelerator that happens on Sunday.
Suppose the far right, Esprella, I'm not pronouncing that properly, I'm sorry, win the election, and I think the right has been outperforming in the polls recently. What happens then to the mining industry specifically?
So we are one of his pillars in his platform. He has said that economy and security are his main 2 issues that he'll be focusing on, and mining is one of the sectors, one of his, I think, 6 pillars, and he will want to see things advance quicker, right? Now, what somebody says on the campaign trail might differ very much so from what happens in real life, but the other very strange one, you saw Trump come out with a very strong endorsement for him. So I would assume U.S. Colombian relations would improve. And something that I think most viewers need to hear is that Colombia is a major non-NATO ally of the United States. That's the same status as Australia and Japan, for example. So it's the longest running, the strongest ally of the United States. So some of these other themes that were playing out could start to really play out in Colombia. So it's worth watching, right? I think things could start accelerating, and like a very similar event of what we saw in Argentina, right? But a much closer ally than Argentina.
So this goes back to our earlier discussion about the supply of copper. We've talked about demand a lot. According to various different sources, copper is about to face a structural deficit going forward. I think you mentioned some heavyweights in the copper and mining industry. Robert Freeland has said that copper is going to be in short supply and much demand over the next coming years. I think that in the next couple of years, more copper demand will be needed relative to 10,000 years, the last 10,000 years of human history. Now, this particular article from Fortune is warning us of exactly what the problem is going to be if copper deficit is not resolved. Are we facing a shortage of copper or a shortage of mines? Because there's a difference there.
Kind of the same thing, right? I mean, there is some recycling, but you're not going to tear down a building in order to recycle the copper to build a new building, right? I mean, the recycling is a part of the process, but it's not something that can be massively accelerated or over it can happen over a short period of time because people are looking for anywhere you find some and scrapping it, but it's not something that can say we should increase our recycling because it's sitting in buildings. So yeah, it really is at least over an extended period of time of a couple of years, it's definitely a mine problem. And I think that all the other levers of increasing recycling have already happened at $6.50 copper. So yes, I do believe that it is. I think it's more of a musical chair event in the beginning. I don't think it is, what are we going to do to incentivize copper? It's going to be, what are we going to do to make sure we have copper?
Here's my ultimate question then. Do we have enough time to build the amount of copper that's needed for the rest of the century?
Okay. It's a fake question because we will always have just enough copper. Always. what means is, will we be able to have the growth and the anticipated plans? Will the economies continue to grow or not? Right. I think that is the question. Right. So, will copper affect the plans? Yeah, absolutely. Yeah, I absolutely believe it. And so at the beginning of the year, we had like, we took the 8 big banks. 4 said this year will be deficit. 4 said no, it'll be next year. But they were always saying it's going to go into deficit. And this year, I think everybody has flopped. They're saying deficit this year, 400,000 tons this year. The entire stockpiles of the world, I think, are like 1 million tons, right? So you can see that already you've just eaten up half of the stockpile by the end of the year. And so, by the way, 1 million tons is only like 15 days of supply anyways. So what happens, David, when you do not have enough copper? Most companies do a just-in-time supply. And what's going to happen is they're going to go, what do you mean it's going to take 2 more weeks to get the switchgear? Okay, fine. It's coming in 2 weeks later. And every single project of construction is going to start to delay. I just got a message today because I'm interested in building a mine one day. And they said, Ian, it now is a 2.5-year waiting list to get a big transformer for a mine. Just transformers, because now transformers have the copper component and they have the AI component, right? So it's already starting to play out. We're going to see plans go, we want to do X, Y, Z, and they're going to go, well, it's going to take us longer. So you cannot the growth will be affected. If you want, when you flip the switch, lights to turn on, and there's not enough copper, your lights are not going to turn on. It's just that simple.
Explain to us, my final question, explain to us why in the West here, in Canada and the US, we can't expedite the permitting and production of mines beyond what it is right now. Otherwise, it probably would have been done. Now, what's the roadblock here? If the government could wave a magic wand and say, hey, Ian, you can begin production tomorrow, supposing your team already has found enough reserves. Let's just say you're operating within Canada. I know you're in Colombia. What would that magic wand look like? What would they remove in terms of barriers here?
We've spent the last 20 years putting up barriers. That's the problem, right? So we want to be more inclusive. We want to do this. We want to look at everything 16 different times. We want to go through these long processes. So I think they're already waving the magic wand and going, whoa, this is a gigantic ball of yarn that we've created. And it's going to take a long time to unwind. And they're like, they're not going to be able to respond, right? It's not just a question of, you go and you make the permit, and then to approve the permit, they go, well, what are we going to tell XYZ group that we've been working with for years that they're not important any longer? Their rights don't matter anymore, right? We've created this system, and as another Friedland, one of my favorite is when people go to the refrigerator and they get their ham sandwich, they don't worry about where the ham comes from. So the world is waking up, right? It's not just we've created these bureaucracies, and so the desire and understanding also takes the education of the entire populace, right? So I don't think it's an easy solution of just waving a wand, right? It takes way too much political capital. That's why I said earlier, it will be much more focused on nearshoring, friendshoring, right? Because it's going to be easier to do. I mean, another comparison is I was looking at Arizona Sonora's project, right? And that just got bought by HUD Bay. And just the costs, right? You know, the how much it costs to do this stuff in your own territory is prohibitive. And I think there's going to be a shift because people are going to go, get that permit done now. And then they're going to go, ooh, wait a second. Oh, yeah, well, maybe, I forgot about that part, right? And they're going to find out the easier solution is to do it at friendshoring. And I think that's going to play out massively over the next decade.
So finally, give us some updates or milestones in the coming months for Copper Giant that we can look forward to.
Well, I always love our conversations. But so thank you for the space. The big one for us is in November, we passed 1 billion tons of resource, which was a big deal for us. We're now moving towards a PEA, which will be wrapping economics around it because we see that as the number one quickest way of creating value for our shareholders. It also aligns with what is happening in the planet right now. The world is waking up to its need for copper. And so we have an experience of actually seeing mines being built, and we want to apply that. And so we're applying that right now. So the big ones for us is you got elections in Colombia. We've got 2 drills running, focus on moving towards a PEA with another resource update included in that. So all those things are moving for us. We're doing very well. We've been executing on what we said we were going to do over the 18 months. We've been drilling and adding 1, then 2, now 3 drills. So it's a very, very exciting times. And I'm very happy. Our largest shareholder, Frank Justra, also shared that vision 2 years ago when he got involved in the company and said, the world hasn't woken up, but it's going to wake up. And so the timing is working out very, very, very well for us.
Well, let's keep tabs on that. Thank you very much for coming back on the show, Ian. We always appreciate your insights, your big picture insights on what the world's going to look like in the coming years. So we'll look forward to the next announcement and the next big development from Copper Giant. Please do follow Copper Giant. I'll put the website down below, and you can stay up to date there. That's ticker CGNT. Welcome back to the show, Ian. I'll see you soon. Take care for now.
Thank you, David.
And thank you for watching. Don't forget to like and subscribe.